Hello, I'm Krista Das. Welcome to Smart Investing Market Insights at TFNFinancialNews.com. As you know, oil is still through the roof. In fact, crude oil futures continue to flirt with $65 per barrel, while average gas prices hit $3.26 a gallon last week. And neither shows any sign of abating anytime soon. My guest today, Adam Lass, market analyst for Wave Strength Options Weekly, is well known for his prediction of this crisis as early as last fall. Indeed, his projections have positioned his readers for aggregate max gains of 565% via call options on oil company shares and energy indices. But what now? Are oil companies overbought, as some are claiming? And if so, what can an investor turn to now? Adam, welcome to the show.
Always good to be here, Krista.
Adam, how about it? Is oil maxed out? And more importantly, do oil company shares still have legs?
To that first question, I will say no, not in any way, shape, or form. So long as we continue to commute twice as far from work to houses that are twice as large and cost twice as much to heat, light, and cool, we will continue to pay through the nose for energy.
So are you calling for even higher oil and gasoline prices?
I'm making several specific predictions for oil and gas, Krista. The first is that oil will not go back below a floor of $60 a barrel until late fall, if at all this year. You know how in fashion they're always saying, and they're always looking for the new black? Well, $60 is the new $50 as far as oil is concerned, so folks had better get used to it.
That's a little rough. What's your second call, Adam?
Right now, we are looking at $3 plus for gasoline. That's primarily due to the fact that we haven't built a new refinery in the States in over 20 years. What we do have is outdated and overtaxed, leading to outages and reserves well below where they ought to be at this point in the seasonal cycle. The question now is not whether we'll pay $3 a gallon. That's a given. The real question is whether there are enough overseas refiners can get product into the American markets to prevent a spike to $4 a gallon by midsummer. This certainly remains to be seen, but should this product come on stream in time, it will still not abate current prices by more than 10 to 15 cents, nor will it protect us from disastrous shortfalls from storms or political crises in the oil-producing states. So again, Americans need to get used to $50 fill-ups.
Yikes. So now we have the outlines of the story for oil. What about oil companies?
Now that's a different story, Krista. Fortunately for my readers who are already holding calls against these companies, shares of both the giant conglomerates like XOM and Chevron and explorers and distillers like Valero and Frontier are up across the board. An example, CVX by and of itself is up some 30% since early spring, as is the Energy Select spider known as the XLE. But now we start to see option premiums on both the indexes and many individual shares climbing through the roof along with energy prices. After all, at this point in the game, this is hardly a secret anymore. It's getting harder and harder to find attractive entry prices, although we did manage to find one last deal recently in the form of October calls on Houston's El Paso Energy at about $1.45, which have put on some 30% in short order. In general, I'd rather be owning energy right now than buying it.
So where would you turn to next for opportunity?
Well, now I see a large sector rotation approaching. One has to ask, who doesn't have a huge energy overhang? And traditionally, that's been tech stocks. I've asked my readers to start moving cash into select stocks, and so far we've had particularly good runs buying Cisco calls, heading into their recent earnings, and longer-dated Hewlett-Packard and Qualcomm calls, looking for these stocks to add $20 and $10 respectively.
Are these plays still accessible, and will you continue to work this vein?
Well, we've already put, we're well into both plays already, but our QCOM and HPQ options do still have some room to run. Of particular interest to readers just coming on board will be our latest tech entry. Like QCOM, it's a major player in the cell phone game, but I'm afraid I'll have to keep the name to myself until my readers are done accumulating contracts. I can tell you that a clean 100% gain may still be available here.
Playing coy, eh? So where can viewers go and get that name, Adam?
Well, they can certainly go to wavestrength.com and click on the WOW link. However, if they would like to read more on my whole group's uptake on how to play sky-high oil, they can always read our WaveStrength market report for free.
Thank you, Adam.
Thank you.
That's all for this edition of Market Insights. I'm Krista Das, and I'll see you again next week on TFNFinancialNews.com. Have a great week.